I would say avoid a company where the incurred claim ratio has increased a lot suddenly or is consistently high. Then you're in trouble. Then they will have to charge you more and more. The premiums will become more and more expensive. So I would say look for a player with reasonable experience and not too much market share. If the person has got low market share, I mean, it can't be so low that they're going to shut down, but reasonable experience, they have to be around for about 10 years or so. So they're not going to go anywhere suddenly, and not too much market share. Then the benefits will stay for a long time.
Week 10 here on Let's Get Rich with Pattu. Of course, we haven't moved from last week. This is part 2 of what we recorded last week. A very fiery discussion on medical insurance and how there's so many questions that keep popping up. So we ended last week's episode on this entire term of cashless, right? Pattu, if I can continue from that thread of thought, are cashless policies preferable? Are there even non-cashless policies available? And should people opt for one over the other for any particular reason?
No, all policies do have the cashless benefit, but like I said, it's not a right. And there can be situations where the cashless is denied, but that doesn't mean the claim is denied. They will say, I will not give you the cashless, you pay the hospital bill first and then apply for reimbursement with us. And that's absolutely legal. And there's not a thing that we can do about it. If the insurer finds something out of the ordinary, either in what the hospital says with respect to the estimate of the of the bill, or with respect to our policy details, the history that we have declared to the insurer, etc., they can always say, we're not going to give you the cashless, apply for reimbursement, and then we will consider it. And there's not much we can do about it. There are many people who argue that going for reimbursement is better than applying for cashless, because there is the argument that when you go to a hospital and say, I want to apply for cashless, the first thing they will ask you is, how much is your insurance limit? If it's 10 lakhs, then people assume that the hospital can happily charge up to 10 lakhs. And therefore, they're going to make you go through all sort of unnecessary tests and examinations and so on. So that is not really true. It can't be done, because if the hospital tries to do that, the insurer will resist. In fact, a few years back, there was a big tussle and many hospitals were out of the network coverage. They stopped taking on insurance. So things have normalized a bit now, and so it's more streamlined. So if you have a cashless benefit, go for it without thinking. It's the most smoothest that you can think about. In fact, I've just did my mother's cataract surgery in the past 2 months, first for her left eye and then for her right eye. Yeah, all I had to do was do the KYC, that is the know your customer details, give it to the hospital. They will submit it to the insurer, and I got a SMS and an email at the end of the day saying it's approved. The cashless benefit is approved. So you have to go get the surgery done, and after that the hospital will take care of all the processing. You can go out, and all you need to pay is the non-medical expenses that I talked about last episode, and that's it. It's as smooth as one can imagine. Otherwise, you have to shell out the money from your pocket, and the paperwork will kill you. It's a mountain of effort. First, you have to send in all the discharge summary, this and that, and so on. Then they will send you queries, and then you have to go to the hospital, get paper internal case papers. For that, you have to pay to the hospital, and then courier it back, and so on. So it's a pain. I mean, when you have cashless, take it with both arms. If they don't give you cashless, don't fret about it. Then you are in for this long road. That's all.
And have you heard of instances where, despite having cashless, even at admission, you have to pay some money? Because I've been through that with my parents. Thankfully, I don't remember the last time I was hospitalized, but there is also a deposit you have to pay even though you have cashless. Or have I got that wrong?
Yes, there is a deposit you have to pay, but it's a reasonably small amount, because the hospital, there can be a time delay between getting the cashless approved. There can be back and forth between the hospital and the insurer. So to cover these expenses and also to ensure in the case where the cashless is denied, the hospital has some money to begin with, there is a deposit always necessary, but that's reasonable. And like I said, insurance and emergency fund, they go together. You can't separate that. So you need to have that ready.
Well said. So, putting the entire cashless discussion aside, but to any other important fine print details about insurance policies that we should know about carefully? And conversely, are there any that we should just totally disregard, which people talk a lot about?
So I have a list of unnecessary features. So
Sure,
anything,
let's
so
tackle that.
yeah. So if you, let's say you go to the insurer's website and you go to the product page, and you'll see in bold font, this policy offers this benefit, X benefit, Y benefit. You can safely ignore it. Any of these, most of those benefits are unnecessary. For example, some of the benefits, like people want maternity benefit. I mean, how many children are you going to have anyway? Right? I mean, inflation is the best contraceptive. So most people are not going to have more than 2 kids, right? So,
Right.
and you're going to have this health insurance policy for 30 years, 40 years. And if you say I have maternity benefit, that's going to load your premium. And it's going to load your premium for all those 30 years and 40 years. Whereas you're not
But
going
what
to
is
have
maternity
children for the
benefit?
next,
Is it
that window is very,
all expenses for your, say, it's your delivery, C-section, hospitalization is paid for? What else could
yes,
maternity mean?
yes, yes, that's it. That's it. That's what
So
it means.
you're
And
saying in a regular policy
that's going to
that's
be
not
one
covered?
surprise. Some do cover it, some don't.
Right. So
So
you're
that's really
saying,
not a benefit
and
you
I don't
need
mean
to
to put
worry about.
words in your mouth, but are you suggesting perhaps that insurance companies are doing this to make money off gullible women?
Well, not gullible women, gullible buyers. Any benefit they offer, see, let me put it this way. If I, as an insurance company, is offering you a benefit, it means I have done the research that offering you that benefit will not reduce my profitability in any way. That benefit is just some fluff that most people will not really take up, and it will not reduce my profitability in any way. So that's why I'm offering you it's just window dressing, right? You can't go by that. So maternity benefits, outpatient claim, Ayush, that is homeopathy, Ayurveda, they are not necessary. You need a cover when you go to a hospital for a serious illness. Things like Ayurveda and homeopathy will not help you. You need modern medicine, or whatever you want to call it. It's been modern for 2 centuries now, or more than that. So you need that. So you don't need maternity, OPD, Ayush. And there's something called the comprehensive health check that they offer once a year. So you can do a master checkup. Please don't do it. Even if you have that, because if you do the master checkup, you're giving data to the insurer. You are telling them how unhealthy you actually are, right? So they're going to use that and say the next time I'm going to increase, I want to increase my cover. They'll say, look at your master checkup. I'm not going to increase your cover. So don't do that.
But that
So
raises an
there's no
interesting
need for
point.
that.
Why don't they force you to do a health checkup every 2 years? I mean, if I was an
They
insurance
can't.
company,
They
they
can't.
can't. Oh, thank you, rules. Okay.
They can't. Thanks to the regulator, they can't. But they offer it as a benefit, and many people take it. That's important. No, you just pay out of your pocket. You can take tax benefits. There are tax benefits out for it in the old tax regime. But so you don't need this health checkup. Then there is something called no claim bonus, no claim
Yeah.
discount, restore benefit.
No claim
Where
bonus,
where your
I
health
hear
insurance.
every year. Isn't it like a big thing?
No, it's not. Just that's just window dressing to make you buy. And it's peanuts tossed to buyers, right? We shouldn't get attracted by peanuts. And there's something called daily cash benefit. So all these are unnecessary features. I mean, if it's there, it's there, but they should not be the reason I choose a company to be my insurer. That's my point. And there are many such things. Any benefit that they offer you, typically, in bold font, where in the brochure, if you look at the brochure, what's the first benefit they put on the front page? That's the benefit you ignore. And by the way, don't read brochures. When I say read terms and conditions, it means read the policy wordings. The policy wordings is a boring document, 30 pages long. That is what you have to read. The brochure is just an invitation for for you to buy. You can ignore it. What the brochure tells you is a document that tells you what to ignore, where the policy document is what you need to read through and through. So those are some of the conditions that you need to features that you can get rid of. I mean,
And I'm sure in the minds of all our listeners, there's one question popping up or two. If these are not important, then what are the important ones that we should definitely look out for and not buy an insurance without?
One of the most important is to look at what is known as the room rent sublimit. Now, many of the PSU policies, that is the ones by United India, Oriental, and New India, they come with what is known as the room rent sublimit. So that means if I have a policy for 5 lakhs, you cannot, they will only cover all expenses if the room rent is 1% of that 5 lakhs. That is
5,000.
5,000. Yeah. And the ICU should be 2%. So it's 10,000. Then only they will cover all expenses. If your room rent or the ICU daily rent is greater than 1% or that 2% of that sum insured, then basically every hospital charge, like nursing charges, doctor fees, diagnostic charges, everything is linked to room rent, except medicines and the implants that they are going to offer you. Every other hospital charge is linked to the room fees that you are staying in and the ICU charges.
The room categories, as they say during admission.
Yes. So you can lose a significant amount of money if you if you're forced to stay in a hospital where the room rent is greater than that 1% of that sum insured, and the ICU rent is 2% of that sum insured. You lose a significant chunk of money. However, I want to make it clear that the private players have offered a policy with no such room rent sublimits only because they want that market share. The PSUs have got huge market share and they want to eat into that market share and they want to offer this.
Is that a good enough reason to change?
From
PSU to private?
It can be. However, you must understand that once these players become established and they themselves have got enough of policy, they've sold enough policies and therefore they are now facing enough claims, then at any time they can change your policy feature from the next year and say from next year your policy will have a room rent sublimit. So this is the problem, because nobody is talking about this, because there are very few unbiased voices about health insurance. Most people who talk about health insurance are people who sell policies for the private players out in the social media, and they will say port yourself, shift from a PSU policy to a private policy, but that benefit is not a given for a lifetime. It can change anytime. It depends on the profitability of the insurer, but that is a huge thing. It can you can end up losing a huge chunk of your money. In fact, 30-40% of your hospital, maybe even 50% of your hospital bill can not be paid. Absolutely. Because you are forced to stay in a hospital where the room rent is higher than that 1%.
But what if you're in a situation like this,
one of the most important
points faced as well? Sorry to interrupt. Say it's your parents are getting hospitalized. Now at their senior age, 60 plus, 70 plus, you want them to be comfortable. You go for admission and they say, hey, your policy only allows you this 5,000 rupee, which is a triple sharing or a twin sharing. And you say, oh, at this age, you want comfort. You want them to have their own room, their own bathroom. It's quieter at night instead of having somebody moaning and groaning next to you. Is there a way around this? Either you are willing to pay that extra money for comfort, or you have a private insurer who says, look, there's no room category limit, and so you can stay in the room you want. Right? Are those the two?
That will work. I mean, having a policy with no room rent sublimits is always preferable. But what I'm trying to tell you is that that is the benefit that you have today. Well, as long as you have it, enjoy it. It may not be around forever. That's all
Fair
I'm
enough.
saying. So yes, I would say if you can buy a policy with no room rent sublimits, yes, you should definitely buy it.
Great.
That's
Okay,
absolutely
so
fine.
room rent
And
sublimit.
yeah,
Any other important ones, Pattu?
so that's something that you look at before buying. And again, you have to look at the exclusions. So what are the exclusions will never be mentioned in the brochure. You have to look at the terms and conditions fully. So what are the conditions for which the insurer will never pay? And you will have to look at check if any of those conditions apply to you. If it does, then of course you are in trouble, which means if one insurer doesn't pay it, then probably all the others won't either. Then
Can you
there
give
are
us some
many people who can't get
examples
health insurance.
of what exclusions are?
um I would say exclusions typically would be cosmetic surgery, any experimental procedures,
Okay,
right? Any kind of also congenital conditions,
right.
autoimmune conditions, and if somebody has cancer, they, even if they've recovered from it, they probably won't cover them. And so on. So those
So what?
it's a
So if you said
fairly long list.
maternity was not an important one, do you think a cancer cover additional is a smart buy? Because I know they're now in fashion. For the last few years, people are offering these cancer riders, I think they're called, or covers or something like that.
It depends. I mean, it depends on how much you can afford. If you
Hmm.
can afford it, yes, but you must be see. It's the point is, if you have a history of cancer in your family, then you're going to have to disclose it. Then those guys will load up the premium. Either they will say, I won't give you cancer cover because you have a history of cancer cover. That sounds awful, but that's the reality. Or they're going to load up the premium so much that it's going to pinch you. So it's a problem. And the conditions under which they will cover would be are the ones that you have to understand. Maybe they won't even cover normal chemotherapy. So there are many things that you have to consider. I would say first do the basics right. Then if you have money to blow, you can always get these add-ons
Sure.
later.
So back to the basics:
So
room rent,
yeah.
sublimit, exclusions. What next?
And then there's something called the waiting period.
Okay.
So there are different types of waiting period. One is you can't claim immediately after you buy. Let's say you just bought a policy today and you can't go and make a claim tomorrow. There'll be a cooling period of about 1 month or so, typically 1 month or 2 to 4 weeks,
Which Varun
approximately. Depends
had
on the
alluded to in his episode, right, about freelancers. Because he had an illness,
yeah.
he can't claim anything for 3 years, and then after that, he can claim.
Yes, and so that is a different thing. So the waiting periods have got different types of. One is
Sure.
this cooling period, which you can't make any kind of claim. Then there is a waiting period for all pre-existing conditions.
Sure.
So that can range from 4 years to 2 years. Again, the private players made it attractive. So they looked at the PSU policies, and all the PSU policies have a waiting period of about 4 years. So if I'm diabetic and if I get insured, then for the first 4 years of coverage, I can't claim for any hospitalization directly or maybe even obliquely linked to diabetes. So that's a problem. Sometimes the claims can be rejected even if it is not directly linked. That's a different issue, but this is the rule. So,
Diabetes for me,
the
Pattu, is
private
a.
said,
Sorry, if I may take a few minutes of your time on diabetes, it's a very touchy topic for me because I've kind of read about it a lot. Right, I watch lectures for hours on the low carb diet and how it helps, etc., etc. Say, for example, we have a friend, a close person, who has a regular insurance policy, is living a nice, comfortable, healthy life, and suddenly, notices some symptoms, goes for some tests. The doctor says, "Hey, you're pre-diabetic. You should do this treatment for 3 months." And I know for a fact, and of course, please don't take my advice. Please take the advice of a medical practitioner. But I know for a fact that on a low carb diet and changing your lifestyle, you can reverse diabetes. Say if your numbers are back to normal and you're in brackets cured, say within 3 or 4 months, what should you do at the time of renewal of the next year's policy? Should you reveal that this happened? Should you reveal that you're normal, that you have What would you recommend?
See, if first of all, I'm a fan of the low carb diet too, and I have not eaten any kind of rice or wheat for the last 6 years. So
Hasn't
that
it
has
changed your
made
life?
absolutely. I've lost a lot of weight. It's made me fitter. But that's probably something we can talk about
Let's do
at
10
length.
episodes on
But
that. I can talk for hours on this topic.
yeah, it is. So it's it the I mean, Indians are getting becoming diabetic more
Oh,
and
it's an
more
epidemic.
because of the insane amount of carbs they eat. Because like I say, there's really no true non-vegetarian in India. There are only people who eat meat occasionally.
You
The
haven't met me,
but
Pattu, yet
everybody
in person.
most of them most people eat a ton of carbs.
Yeah.
uh, I
You
mean,
wake up in the
you know
morning, you
what a
want
low
your
fat,
idli
low
dosa,
carb
you want
diet
your
is.
upma. For lunch, you have rice and dal, and you have your chapati bhaji. For dinner, you have. Yeah, it's the Indian diet,
So
unfortunately.
so diabetes is waiting for you. No,
Yeah,
a ton of carbs with no physical activity, diabetes is just waiting for you down the line.
absolutely.
So but coming to your question, there are two situations here. Let us say a person already has an insurance policy, then he or she becomes pre-diabetic or whatever, diabetic and so on. Then instead of going the conventional uh, route of Western medicine, they do this low carb thing. They change their lifestyle, and their HbA1c levels are normal, and they've become normal now. It doesn't matter. It doesn't matter at all to the insurer. Once you had declared yourself to be diabetic to the insurer in such a situation, it doesn't matter if you become normal later on. They are still going to load you the same. However, let's say I don't have a policy at the moment, but I want to buy a policy. I do a medical checkup, and I find that I have the onset of diabetes. I am pre-diabetic. Then I change my lifestyle, make my HbA1c levels normal. Then after how much is it? 2 years or 3 years, I can apply for a health insurance policy, assuming my HbA1c levels are normal all the time. I can then, I'm not obligated to declare my earlier diabetes health test as a pre-existing condition. So a pre-existing condition has got a stipulation of any disease or condition or symptom that existed for the last 24 months, if I'm not wrong. Some insurers may also extend it a little longer, but it depends. I would say at least 2 years. So if you have been normal for the last 2 years, you can apply for a new policy without declaring your old test. So it depends. So
Fair
but
enough.
it can become, yeah.
Complicated. Yeah. All right. So,
So
room
let me,
rent,
yeah.
exclusions, waiting period. Anything else?
Yeah. So in the waiting period itself, like I said, there's a cooling off waiting period. No claim for the first 30 days. Then there is a waiting period for 2 to 4 years for the pre-existing condition, any pre-existing condition. Then policies will have specific waiting periods for specific diseases. There are different kinds of diseases. For example, a person has got hemorrhoids, or a person has got sinusitis, and so on, etc. So there can be specific waiting periods for specific conditions. That also one should look at, because we may come in under those, and we should understand when we can actually make the claim. Because many times in all these social forums, they say my claim has been denied. What can I do? It's injustice. And then somebody will say, go to consumer court, go to this court, and so on. But if you actually look at the nitty gritty, you will notice that this person has made a claim when they should not have, right?
Yeah.
When the condition was actually excluded. So that's where the awareness and the labor that you put into read the TNC makes a difference. So that makes a huge difference. So
Okay. So then moving on to a entirely different question, Pattu, right? We've spoken about the important things, the stuff we should disregard in insurance policies. Now let's go back to that slight debate of salaried versus freelancers, right? So a salaried person is employed in a nice big company who offers them insurance under a group insurance scheme. Say he's 25 years old. However, at 25, if you were to buy a private health insurance, it would probably cost him, I don't know, 10,000 bucks for a good amount of cover, right? Maybe 10 lakh or maybe 5 lakh, something like that. But he knows he's employed for the next 15, 20 years, and the company is offering fantastic medical insurance. Everything's covered. His parents are covered. His spouse is covered, or her spouse is covered. Is the math make sense to continue to buy that private insurance from day one, despite having a group cover?
I know people who have who became hospitalized in the 2 weeks that they had from one job to
the
another.
other.
They switched from one job to the other. It took 2 weeks for the paperwork for the HR to include them in the policy, etc., and all. In that 2 weeks, they got hospitalized and they had to pay from their pocket. So it's a huge risk. And suddenly, if there is industry-wide layoffs and you get laid off from your company, you can't go anywhere else. You can't handle that. And especially for people who have no other option, many people get group cover only for their parents, only from their employers. That's a
Right.
huge risk to take. So there must be a private policy. And like I said, when you're young, you can take a small cover just to, you can start with 3 lakhs, 4 lakhs, 5 lakhs, and then you can every year gradually increase it. I increase my cover by 50,000 rupees every year from 2007 onwards. Only recently I jacked it up a bit, but it's not going to be so difficult. I mean, your increase in pay, your bonuses will take care of that little extra expense that you have. So a private policy is mandatory.
Sure. But I
And
won't let you go so
yeah,
easily, Pattu. One question I have is, suppose somebody does not take a private policy, right? And just has a group, where he's employed, he has that group cover, and he retires at whatever, 55, maybe 60, and then says, oh, I need my personal insurance, medical insurance. At that stage, does it become unaffordable, or is it still affordable if he's at 55 or 60?
First of all, okay, speaking of affordability, we'll have to talk about group covers, but there are some people I know who have switched from a group cover to the policy of the same insurer. That is, they have talked to the insurer and said, look, I've been working in this company for the last few years. I've had their group cover offered by you. Now I want to get out of the company. Can I switch from my group cover to your private policy? Some people have got it. Some people have been denied. So it's very risky, and it can be a very expensive thing. There will be conditions. The company will say that some things can be excluded. For your parents, we will not do this and that. So it's a big risk, and I would say don't delay that, and buy a private policy as soon as possible when you're young. But speaking of affordability, group covers have also become very expensive in the last few years because 10 years ago, the PSUs, the public sector undertakings, the United India, New India, and Oriental, they had a market share of about 60%, and the rest was by the private players. 20 years ago, the PSUs were the behemoths. They had almost the entire market share.
Got it.
So, if you look at the private players, there are two types of private players. One is the general insurer, companies like ICICI Insurance, HDFC Ergo, and so on. These are companies that they offer health policies as well as vehicle insurance, fire insurance, accidents insurance, etc., other kinds of insurance. Then you have the standalone health insurance guys. These are players like Niva Bupa, Manipal Cigna, Care Health, etc. These are about 5 or 6 of them. Star Health. They offer only health insurance. Now, these guys saw the corporate route as a nice way to get market share. So they offered the corporate policies at very cheap rates to the employers, and they said with all kind of nice fancy benefits. But during the last few years, their claim experience has been very poor. COVID has been a contributing factor. and many of the benefits of these group policies have been removed, or they have been made, the whole policy itself has been made more expensive. For example, earlier parents were covered at a nominal cost, but now you'll have to pay a lot more for covering your parents, and the parent insurance covers will come with a copay clause. That is, you have to
You
pay
pay a
10% or
percentage of it.
20% of the cover, and the insurer will take care of the rest. So the group policy is also very expensive. So of course, you don't feel like it is expensive because you're not paying for it. You feel like the
Exactly.
company is paying for
Yeah.
it. But it's all the same thing. It would just means if the group policy has become more expensive, then the rate at which your salary is going to increase in the future will come down by that amount. So
Interesting.
yeah. So
And if an individual had to
yeah.
buy his own private insurance or her private insurance, which of those three categories would you suggest? PSU, general insurance players, or these people who are focused only on health insurance? For some reason, the way we are programmed to think is the person focusing only on that one thing would be the best option, but clearly not.
So it's broadly it is PSU versus private. That's the distinction. I would say a person in a non-metro city, in a tier 2 or even a tier 1 city, if they can have hospitals nearby which are not that expensive, then the PSU policy is okay, because these PSU policies come with a room rent sublimit of 1% or 1% room rent, 2% ICU charge that I talked about. It's okay we can manage with that kind of a PSU policy in a non-metro city. In a metro city, there are very few hospitals that are cheap, that are reasonable. And even if they are reasonable, I know of a hospital which is run by a religious institute, which is meant to be,
For the
low
poor.
expense.
Yeah.
But so I took a friend for a hospitalization just a few months ago, and I noticed their rates have jacked up by a huge amount. I asked around, and they told me that a team from a corporate hospital had visited them and told them how to remain profitable, and how the only way to do that is to jack up rates. So it's happening everywhere. There's no one's special or excluded from this whole rat race. And which means that in a metro you need a policy with which does not have any kind of sublimits, which means that you need a policy with a private player. Right? I have managed to get away, although in a metro, I'm in Chennai, I have managed to get away with it with a PSU policy. I have a policy from United India. I've managed to get away with it. But the rate at which the hospital bills are increasing, the inflation in hospital expenses is enormous. It's at least 10%. It is probably more than that, but it's at least 10%. Whereas you can't keep increasing your cover at that rate, because your premiums will start pinching your pocket. So you need a cover with a no room rent sublimit, which means a private player. Now, if you look at among the private players, do you need to go for a general insurer or a standalone insurer? I would say it doesn't matter. It doesn't make a big difference. So
with the size of the company
that's
and the number of policies they handle make a difference, and is that data easily available? Who do you trust?
It's available in the annual report of the regulator. The IRDAI annual report has this. It's not easy to find it, but you can find it if you spend a few minutes on it. Typically, I would say avoid a company that has been paying out a lot of claims. So you have something called the claim incurred ratio. Just like the life insurance has got a claim settlement ratio, you can't have claim settlement in health insurance, because in life insurance you pay either the claim is paid or the claim is denied. It's binary. Whereas in health insurance, they can pay 10% of your claim and say I paid the claim. Right? So you can't have a claim settlement ratio defined for health insurance policy. That's not possible. But you can have what is known as a claim incurred claim ratio, which is a profitability measure. So that's basically the claims paid in a year divided by the premiums collected in a year.
Right.
So if that ratio is close to 1, that means you have lost all the money you have collected as premiums to claims.
Yeah, absolutely.
Right. So that happened recently for a company. In the last few years, it sold policies aggressively, and therefore it had the highest market share among private players. But then that means it also had the highest number of claims,
Yeah.
which also means it had to pay out the most amount of money among the privates, and therefore the incurred claim ratio became very high. So if for the PSUs, the incurred claim ratio is greater than 100, greater than 1, which
Right.
means that they're losing money constantly. So the government is supporting them, right?
And if a private players above 1, just avoid them, right? Is what you're saying.
It cannot be for a corporate. It cannot be above 1. It above 1.
They won't
Even if it
survive,
is 80%.
Yeah.
No, they will. I mean, they have shareholders to answer. So the highest I've seen is 0.8, and even
And
that.
what's a healthy limit? 0.25, 0.1? Does it go as low as that?
It can't be too low. If it is too low, that means they're not paying out claims at all.
So what's the healthy middle ground?
I don't see, the incurred claim ratio is more a profitability thing. You can't use it for you can't say if my incurred claim ratio is good, then I will get my claims. That's not the kind of equation that it has. But I would say avoid a company where the incurred claim ratio has increased a lot suddenly or is consistently high. Then you're in trouble. Then they will have to charge you more and more. The premiums will become more and more expensive. So I would say look for a player with reasonable experience and not too much market share. If the person has got low market share, I mean, it can't be so low that they're going to shut down, but reasonable experience. They have to be around for about 10 years or so. So they're not going to go anywhere suddenly, and not too much market share. Then the benefits will stay for a long time.
Interesting. Here's an interesting question, Pattu.
Easy to find.
Yeah. See, in life, pure term insurance, I can buy 3 policies, for example, 1 crore each, right? And if I pass away, my family gets the benefit of all 3 policies, right? In medical insurance, how does it work? Can I buy, say, 2 policies or 3 policies? And say, for example, I have a surgery worth 5 lakh. Can I claim the 5 lakh from all 3, or is that fraud?
No, first of all, you cannot there's a limit to the amount of life insurance you can have, because when you buy one life insurance policy and when you buy the second one, let's say B, when you apply for B, you have to declare that you have A.
Yes.
And when you apply for C, you have to declare that you have A and B. But then the insurer C will look at your net worth, will look at your annual income, and will also look at the total amount that has already been insured. And they will say you already have enough insurance that you don't need it. So we're going to deny that. So there's a limit, but there is no limit to the number of health insurance policies you can buy. However, you cannot claim for the same expense. You can what you can do is you can choose. For example, almost all group policies have got maternity benefits.
Right.
Whereas, like I mentioned earlier, maternity benefit is not a key factor for you in choosing your private policy. So if you have a child coming up, you can pick and choose which you are going to claim. There can be one policy which has got a specific waiting period for a specific condition, and that may not be there in another policy. So you can choose, but that's really not. That's a bit of an overkill. I would say one good policy is more than sufficient for most people.
Fair enough. And quickly over to this entire topic of porting, which means I have an existing policy. I've been paying it for 10 years, and suddenly I find something attractive in another policy. Is it like a mobile phone subscription of mine where I just port the same number to another player? How does it affect my premium? How does it affect the sum assured or the cover, etc.?
So the idea of porting is theoretically is that, let's say I have a condition, a pre-existing condition, and I bought insurer A, a policy from insurer A, and after 4 years, that pre-existing condition is now claimable. I can now claim if I have a condition with. Now, if I go to another insurer B, if I buy a separately, individually, then that insurer B will say you have to wait another 4 years for making a claim for that condition. But if I port from A to B, then that waiting period will also get transferred. The benefit of the waiting period will also get transferred. You don't need to wait. However, applying for porting is a right.
Right.
Which is not much of a right, which is just basically filling up a form. Applying is a right. Getting it is not a right. The insurer B will say, you are not a healthy person. I don't want you in my insurance pool. So I cannot, your porting application is denied. That happens most of the time. So if you are unhealthy, porting is very, very hard these days. Also, even if you're healthy, the typical reasons, one of the most important reasons why people port is expense. Suddenly they find that the premium is jacked up by a huge amount. The insurance A, because of their poor profitability or higher claims experience, they have increased the premium, and they get, oh, this is unfair. They do all sort of rants here and there and say, I want to port. But what is the guarantee that the same will not happen with insurer B also? So it's a case of you can run but you can't hide. So I mean, how often can you port? I mean, you can port any number of times, but there's a limit. I mean, there's it's not practical. So sometimes it's better to just be where you are. It's good.
Be loyal. Right.
That's not loyal is too much. These guys don't deserve our loyalty.
Yeah. Be loyal for your own sake, not for their sake.
Yeah.
One final question coming to mind on this unending discussion, which could run into several episodes, is this entire debate between getting individual cover versus a family floater cover. What are your thoughts about that? And when is the moment right to convert an individual cover to a family cover? And what are the advantages?
So let's say we have there's a family of let's say 5 people. So you have the husband, the wife, the child, and then the in-laws, the parents of either spouse. So in what I would suggest is get a floater cover for the husband, wife, and child, assuming that all of them are healthy, and get a separate floater cover for the in-laws.
First of all, what's a floater cover, Pattu?
Floater cover essentially, so it means that in an individual cover is easy to understand. If I have a 5 lakh individual cover, it means that up to 5 lakhs I'm covered, right? But if both of us have a floater cover of 5 lakhs, it means that
cumulatively we are only covered up to 5.
our hospital bills up to 5 lakhs will cover, which means that if my hospitalization takes up 5 lakhs and you have an hospitalization subsequently, your bill will not be covered. Sure. Because that 5 lakhs I have eaten away that. So coming back to this family, the point to understand in a floater cover is that there are 2 factors that decide the premium. One is the age of the person who is in the group. The oldest person determines the premium. So naturally, the oldest person in such a family is going to be the in-laws. So that's why I say remove the in-laws from the floater plan. Cover only the husband, wife, and the child or the children. Buy a separate policy for the in-laws, because 1, they're older, 2, they may have some pre-existing conditions, and even among the husband, wife, and children, if one of them is particularly sick or have fragile health, remove them out from the floater cover and get a cover for the rest of the people. That person can be got an individual cover, or it may be such that they cannot be insured. So those are situations. So these are the things: the health of the people in the pool and the age of the people in the pool. That's what decides what you buy. It's always advisable to buy a separate cover for the senior citizens or those who are close to that age in the family.
And so on that note, a discussion which has taken 2 episodes and plenty more in the second episode and could go on for many more. We'll wait for your questions as well, dear listeners. The show is nothing without you. We urge you to please send in all your feedback, questions, suggestions for further topics, etc., etc. Anything you found questionable about our discussion on medical insurance, please just be in touch. The show is nothing without you. On that note, Pattu, how do we sum this two-part episode up? What is the important part to take home after discussing so many intricate details?
So let's look at this from the point of view of a buyer. There are many people who have not bothered to get themselves private policies, health insurance policies, because they're scared. So I think let's do a checklist of the factors that they need to look for while buying a policy. So I would say the first thing is look at the waiting period and the exclusions. And as long as the waiting periods and exclusions are reasonable, that's okay. For example, a waiting period of 2 years is quite okay. It's quite reasonable because you're going to hold this policy for the next 3 decades, 4 decades of your life. How many hospitalizations are going to happen for that particular conditions in the first 2 years? At max one, right? You can take the chance of paying that out from your pocket, and after that the health insurance will kick in. So that's quite reasonable. So you can't it's like trying to wait for the perfect bride. You will never get married. It doesn't happen. So it has to be reasonable. So as long as the waiting period and exclusions are reasonable, that's a first check. The next is there should not be any copay conditions in the policy. Some of the policy insurers will cover only if you are willing to do a 10% copay, 20% copay. That is, you share 20% or 10% of the bill and so on. That's bad. From day one, when you're young, that's not a good thing. So there should not be any copay. And like I mentioned, there should not be any room rent sublimits. Of course, with a caveat that all these benefits can change down the line, but these are the benefits today. You can enjoy them while you have them. And because of technological changes, many of the minor operations that required overnight stay have changed to a daycare procedures in the hospital. For example, for treatment for piles, treatment for cataract, etc., etc. Except when when the patient has got other conditions that need to be monitored and so on, overnight stay is not necessary. There is a myth that overnight stay is necessary for insurance cover. That is not the case. There are thousands of daycare procedures. So a good number of daycare procedures, if the policy covers, then that's a good thing to have, and that's the next thing to check. And where are you likely going to be hospitalized? Typically, you will be hospitalized in the hospitals close to you, right? And in the neighboring hospitals, either close to where you live or where you work. That is the probability of hospitalization. Of course, it can happen anywhere, but that's where the probability is higher. Find out whether these hospitals are in the network list. That is the list where you can claim cashless. So a network hospital means you can go to the hospital, show them your insurance card, and you can apply for cashless benefit there. If it is a non-network hospital, you cannot do that. You have to do via a reimbursement claim. Then there's a third kind of hospital called a blacklisted hospital, where the rates are so exorbitant that the insurer will not cover even via reimbursement. So we should check that our neighborhood hospitals don't fall in the blacklisted category, and they are in the network list of network hospitals. So that's again a good thing to have. What I would suggest is have a healthy relationship with a family doctor. Have a family doctor. The notion of family physicians have gone down in the present age because of super
Absolutely.
specialists and so
Yeah.
on. But always have a family doctor, and every time you get hospitalized, you ask for a referral through your family doctor, and make your family doctor come to the hospital once a day, or maybe even once in a few days, and let him oversee the procedure, because he will ensure, even if you apply for cashless, the hospital doesn't take you for a ride and add XYZ tests and procedures extra. So the family doctor plays a very important role in in the whole thing, in your wellness as well.
What a
And
fascinating insight. Yeah.
yeah, I had stories. So I've been an attender, a patient attender for several days. In fact, I once went 1 month non-stop as a patient attender for my father. So I
Wow.
used to talk to the security guards, to people in the insurance sector, and I get to know what the hospital does, and that's how it. So some of these hospitals take you for a ride, and
Oh,
I know a
absolutely. There's no
situation.
doubt
Yeah,
about that. And
so
it's
it's you got
really
to be
sad.
very careful. So that's why I said the Dolak thing. You are facing the heat from both corporate
Yeah.
establishments, so you have to be careful there. And so one final aspect that we probably have not touched is the idea of a super top-up insurance. I'll mention that briefly. So
Sure.
we started with this whole episode with how much insurance is enough for me, and I said uh, at least, well, how much did I say? 10%, 20% of your take-home pay. Forgot what I
You
said.
said
Yeah, something
25%
like
would
that.
be a good benchmark,
25,
and it would
25%.
cost you
Sorry.
10% of that cover as your premium.
Yeah, thank you. So about that, but there can be situations where even that can be expensive. Where let's say that amount is 10 lakhs. Uh, can I buy a 10 lakh policy straight up, or is there a way to reduce my expense? So the way to do that is to split this cover, where you buy a 5 lakh normal cover, which also colloquially called as a base insurance cover, and then you buy another 10 lakhs as what is known as a super top up insurance. You can top up the policy. The idea is basic. It's a game of probability. You say that, look, uh, most hospital bills are going to be a few lakhs. So I can pay that with my base policy of up to 5 lakhs. But for those extraordinary hospitalizations, which is going to cost more than 5 lakhs, I will have a backup by what is a super top up insurance. A super top up insurance is something that has a deductible, which means that it will not pay up to a certain amount, but after that, it will cover. And you can have the deductible set as 5 lakhs. So up to 5 lakhs, you have your base policy, and beyond that, your super top up insurance will kick in. So the idea of doing that is that because the super top up only pays beyond 5 lakhs, it is much less expensive
Right.
than your base policy. So instead of paying a 10 lakh base cover, you can have a 5 lakh base cover and a 5 lakh super top up insurance. The cost will be much lower.
But
Of
does
course,
it
there are
work the same way?
nuances.
For example,
So
if you
there
have
are
a 8
nuances
lakh
to it. Yeah.
expense. Yeah.
So if you have an 8 lakh expense, the base policy will cover 5 lakhs, and
Right.
the super top up will cover 3 lakhs. Of course, there are nuances to the whole thing, where you have something called a top up insurance, super top up insurance, and so on. But I don't want to get to that in this episode. Maybe we can do something else later on if there is enough interest among
Pattu, this
readers.
has
But
been the
because we can
longest
just, I mean,
farewell message. It's almost like half an episode because there's so much to talk about,
yeah,
right? I have one
yeah,
final question.
it's
Is
so
there
I
any policy that
yeah.
covers consultation fees of doctors, which can be so expensive, especially in metros?
No, 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 no. You need a hospitalization. Typically, no. You need there are pre-hospitalization and post-hospitalization fees. So, for example, when you know that you're going to have a surgery done, then the bills, doctor bills, the doctor fees before the hospitalization and after the hospitalization
Are covered.
for 2 weeks
Yeah.
are covered, but not typically. For if you just go have a typical viral fever and you just go
Sure.
down, that's not covered. It has to have an hospitalization linked with it.
Emergency fund always first, the foundation. On that note, Pattu, thank you so much. And there's so many pending questions. Our listeners will suggest questions. Our team will suggest questions. And this may go on. Maybe we'll touch upon medical insurance again someday. But for today, thank you so much for joining us all on Let's Get Rich with Pattu. Be in touch. And Pattu, I'll see you next week.
Take care. Bye bye.